all this strategy to get setups like this. So let's start it off from the beginning. Let's go ahead and look at the market from the 4-hour time frame. We always want to highlight our swing points, our higher highs, higher lows, lower highs. In this case, the market is bullish, so I'm marking out my higher highs and higher lows. I like to set alarms just so I'm not constantly just sitting on the charts and just waiting for something to happen. I noticed that once I just did this simple thing, I highlighted what I'm looking for. I'm not looking for anything else, and I let my alarms on trading view just let me know, hey, it's getting to an entry point, or hey, it just broke structure, let's start looking at the charts. I do this, and I'm telling you, your success rate will go through the roof. I'm gonna go ahead and just play it out. Beautiful. It pulls back in, it broke structure, and it pulls back into that range that I'm looking for. So I'm gonna go ahead and hop into the 5-minute time frame, and I want to look for basically where the market is showing you its cards. You want to look for, some people, there's so many different terminologies for it, but honestly, you want to look for basically it to give you that tell where it's breaking structure in one direction and it starts flipping. Some people call it a change of character. That's just one of the terminologies. You're looking for exactly that. I'm going to go ahead and let this play out a little bit longer just so we can get what we're looking for. Beautiful. I marked out swing low and swing high. Now I'm waiting for the market to break structure on either the high or the low. Depending on that is what I'm going to be doing next. Look at this. It's pulling to the downside. Beautiful. I think that was a little bit of news. That's perfectly fine. It starts pulling to the downside. We want to see stuff like this. We want to see aggressive moves because all that is doing, it's sweeping out the liquidity. It's kicking out all the traders are already getting buys or sells. That is literally a Wyckoff schematica. That's literally one of the 8 different setups that there is. Now, beautiful. The market is slowly playing out. We want to see it break structure to the upside. If we can get that, that's when we start looking for a move. So this is a perfect example. I just continue to set my alarms and just let the market show me its hand. So all we're looking for here is the market to show us its hand. That's what we want. Use your tools that's in front of you. Me, I love to use the alarms. That prevents me from over trading. That prevents me from sitting on the market and just looking at the charts a lot longer than I need to be. Beautiful. It's giving us the setup. It's showing us what it wants to do. It broke structure to the downside. It was minor, but it did in fact do it. So now, seeing that it also broke structure to the upside, this is a perfect scenario that I'm looking for. It broke structure to the upside and it's pulling back in. That's what we want to see. It's pulling back into that mini range we have here. Now we're going to go into the 1-minute time frame and start looking for our entry model. I like to say the best way to take a trade is to look for the highest probability. So right now we're just finding proof of what's going on here. Demand seems to be in control. It already respected it once. Now I'm just going to mark out another demand, but ideally I also want to mark out supply. And a lot of people are like, wow, why do you want to mark out supply? You're looking for buys here. Well, I like to do that to show the transactions. I like to see how this plays out in terms of market structure and how it's reacting to it. If you see the market's reacting to a particular zone, that's showing that it's valid. You want to see it react to it, then in this case, I'm looking for the market to react to the supplies and then play through it. If it does that in a, kind of in a situation kind of like this, if it looks similar to that, then that tells me that that supply is valid and it's telling me who's in control here. And in this particular case, demand is in control. Trading is always just looking for the highest probability. As the market is changing, you need to be adapting with it and finding the highest probability. So right now, yeah, I just marked out that whole section. I think that's the best option for me. Just to be on the safe side, I went ahead and put my stop loss right under that demand. Beautiful. I'm just making it even, to be honest with you. I just like to do that. But in this case, I like to look for 1 to 5s normally, but you're not always going to get that. So that's when I hop into the 15-minute, and I will use the fib from time to time to kind of show me where my TPs would be, right? And I like to just put my final TP roughly to the nearest TP on the fib, if that makes sense. And I've done that for a while now, and it's done miracles for me. It's been very helpful. It's actually helped me gain a little bit extra profit, than what I was originally aiming for. Now, the market played back into it, tapped into the zone. You're beautiful. Now, this strategy is very simple. I always tell people, you're just looking for the highest probability. That's all we're looking for. We're not looking for something special. We're not looking for 8 different things to happen and correlate. I always explain to people that when you go to generate or create your strategy, you need to make it simple and mechanical, but with a little bit of your own personal discretion, right? And it's a system that you do not change. Obviously, it needs to be proven from, back testing, but when you create that system and you're trading no one's going to trade without emotions or like a robot, but if you can do your very best to not let anything change. So in this particular case, the market pulled back. A lot of people probably would have got scared and got out as soon as they saw it dropping like that. You don't want to be that kind of person. Just ride it out. I always tell myself, once you're in that trade, that money should be considered a loss in your back of your head. If you put that in the back of your head, you're going to notice that you're going to be able to ride trades a lot longer and follow your strategy. Now, if anyone has any questions or needs any tips, advice, we have a free Discord. Anyone's welcome to hop on and we'll answer your questions. You're more than welcome to DM me or my partner Solo E. And as always, guys, stay profitable.